And welcome back to KTN Morning Express. We are glad you're watching. Now, this morning we're going to be talking about credit ratings, and that's just in light of what's happening in the Kenyan market, where access to credit has been for long been kind of denied for most borrowers. But now, just to help us understand the intricacies of credit rating, I'm joined by Sam Omukoko, the Group Managing Director of Metropol Credit Reference Bureau. Sam, welcome to the show.
Thank you for having me.
And the general nature of how credit reference bureaus, what's the nature, from where you stand as an intermediary, what's the relationship between borrowers and banks?
First of all, maybe I could say that credit reference bureaus are institutions licensed by the central bank to receive credit information from banks and other lending institutions.
Yeah.
So basically the way it works is that banks would submit credit data on their customers who have loans to credit reference bureaus, and the credit reference bureaus will then create profiles for customers. And when this customer goes to the bank, then the bank would use the profile to determine how the customer has been paying their loans. And that becomes part of the factors that they use to determine the creditworthiness.
And just like I was asking before, so what is that relationship between banks and is it that banks don't trust borrowers anymore, or is it that borrowers have become that kind of cautious people that you deal with going forward?
It's all about if when a customer goes to the bank to ask for a credit facility, what is critical is that the banks need to know the character of the borrower. For example, if you are going to a new bank, most banks will tell you that you need to run an account for 6 months before they can actually get to understand how you service your debt. But what's happening is that with the coming in of Credit Reference Bureau, if that information is already on the credit profile, then the bank does not require to ask you to run an account for 6 months, because that information that they require to assess your creditworthiness is already in your credit profile at the bureau. So they can just access it and then see how you have been servicing any past credits that you accessed. And then on the basis of that, they should be able to assess your creditworthiness.
Credit reference bureaus have been around since about 2010, so about 4 or 5 years of existence. Just to help us understand what goes into credit scores, perhaps are you able to take us through the process of how you're able to generate a credit score for Michael Karanja or Sam Omukoko?
Okay. First of all, there are fundamental factors that lenders use to assess one's creditworthiness. They'll be looking at your character, and your character is basically how you have paid your past borrowings. They'll also be able to look at the capacity for you to service the debts. Do you have cash flow? How much money are you earning, and when does it come in? They'll also be looking at things like the conditions, environmental conditions that can affect your ability to continuously generate that cash. So what we do in generating a credit score is to look at all these factors that determine your character, factors that determine how much cash flow you generate, factors that look at your general behavior in terms of what you do. And basically, when you put all this together, then each one of these factors will then receive a weighting. Yeah. And that weighting then is put on a scale. For example, the scores that we have at Metropol run from 200 to 900, and with a cutoff of 400. So if you score anything below 400, it means that your creditworthiness is poor. You have a default item on your list. Any score above 400 going to 900 means you're progressively better at paying your debts.
But just looking at that, sometimes we look at some fundamentals like intangibles that you cannot necessarily just weight me on. So why then don't you always, if I present myself with a good, like what, if the money is if it's for a business, how then are you not able to understand maybe that whatever is on paper does not reflect my ability to repay? How then do you factor those in?
Usually it's a challenge in terms of the credit assessment process.
Yeah.
Because basically, if you are assessing one's character, you're looking at evidence of past behavior. Yeah. It's always a feeling that your past would predict what your future will look like. If you have been paying your debts on time, then it's most likely that you will continue with that particular habit. And of course also the capacity, what are the sources of the revenues that you have? In terms of the intangibles that you're mentioning, that could be like good character is an intangible.
Yeah.
It's an intangible asset. In fact, what credit bureaus are doing is that they take that character and convert it into value. You'll be able to say that how can you put a measure on your good behavior? There are other factors like what sort of assets have you accumulated. If it's a business, we look at your balance sheet. If you are an individual, we'll be able to ask you what sort of assets do you have? Do you have property, a house, a shamba, plot, or something like that?
Yeah.
Those are usually mitigating factors. But the two most important factors that go into credit assessment is your character and your capacity to service the debt.
But just looking at that and the way credit rating works, you're telling me anything below 400, I'm characterized as a bad borrower. But just looking at that, what happens if you've cleared your past debts, but you're still on that 400 mark? Well, how long does it take before I'm able to cross from that 400 mark and work my way upwards to the 900?
The way the system works and the current credit bureau regulations is that if at one time you defaulted on your loan, whether it was an M-Shwari loan or a bank loan or a SACCO loan, what happens is that that item will find its way onto your credit profile. If you struggle and pay it off, the law requires that it remains on the system for at least 5 years before it's cleared. However, the fact that it is on your record does not mean that it will impact on the credit scores that you now create in future. But what we have seen is that institutions that are coming up with mobile phone loans are very strict in how they assess your credit worthiness. They have defined very strict rules that if at any one time you defaulted and you apply for a mobile phone loan, then on that basis they will reject your application. And therefore it continues to affect you as we progress forward. But mostly what is important is that if you had defaulted and your score was below 400 and you pay your debt and you take further facilities, then and you pay your debts on time, then your score will begin to improve.
But isn't 5 years a long time to be listed for that entry to remain on the books?
Yes, it's a long time, but remember the initial regulations actually had provided for 7 years. And that's why we had to lobby and say 7 years is rather too long. Why don't we be able to reduce that at least to a much shorter period? And then we settled on 5 years. But it all goes on what we call the Limitation Act, that for how long does a debt remain legally enforceable? Usually it's about 6 years. So at the expiry of that period, even if a debt remains due, you cannot take somebody to court to enforce that particular debt.
Obviously, default is characterized as someone who's not able to pay within a period of about 3 months. What happens then after, if I'm able to pay it from the 4th month going forward? Does that then, or am I already in the books? Does that change how then you interact with the borrower?
Yeah, default period is defined as 90 days. If you have a monthly installment loan and you miss 3 installments, which means 90 days, then you will be put into the bureau as a defaulter. What I also need to mention is that the current regulations do provide that banks share all of your information with the credit reference bureaus. So if you're paying your loans well, that information is with the bureau. If you default, again, that information is with the bureau. So then what begins to distinguish your status on the bureau is how well you are paying your debts and what then is your credit score. So if you're on the bureau, you can either be on the blacklist or on the gold list. You are on the blacklist because your score is below 400, and you're on the gold list because your score is above 400.
Obviously, when these regulations were introduced, I guess the fundamental was that it was supposed to distinguish the good from the bad, like you rightfully say, gold and black. But there has been a feeling that banks have only been using the information just to cut off or blacklist people, serial defaulters, as it were. So, in your own words, how do you think that the credit reference bureaus have been used to their full effect in as far as even just making it easier for someone to access credit?
Initially, when the regulations were introduced, the banks were mandated to share only default information. And therefore, we as the bureaus were receiving only information for customers who had defaulted. And therefore, most of the profiles that were on the bureau were default profiles. And at that particular point, what was happening is that if you went to the bank and the bank checked the bureau and found you on the bureau, you were on the bureau because you had defaulted. But that was then changed to say that the default customers constitute about 5% of the entire borrowing population. What about the 95% who are good borrowers? How can they benefit from the bureau? So the laws then were changed to allow banks to share that positive information coming to the bureau. So what then is the position is that as a good borrower, if you are on the gold list and you go to the bank, today banks are able to consider your application and waive collateral. We have seen a lot of unsecured lending now increasing in the market. It's the same reason that banks have had the courage to now go on to mobile phone lending, because when they're assessing you on a mobile phone credit product, first of all, they have never met you. They are only assessing your character. And if you pass on the character score, they will be able to extend credit to you. They're not asking you for collateral. But behind the scenes, what is happening that every application that goes through the system is being referenced with the bureau. So if you are on the blacklist, then automatically you are rejected. If you are on the gold list, then you get the facilities that you are looking for. So what I can say is that the clear benefits have accrued to borrowers in this market, that many borrowers can now access credit without the requirement of providing collateral. And the number of borrowers has drastically increased. For example, when M-Shwari was introduced, I think the number of borrowers went up by more than 1.7 million within a very short period of time. We've seen KCB come up with the M-Pesa product. Again, within a period of months, we hear they have processed more than 1 million applications from customers. And all those are on unsecured terms.
Just looking at, you've mentioned mobile borrowing, just looking at how that explosion has been over the last 3 years, does that now create a new credit scoring system? Do you get access to some of this information?
As a bureau, we have access to all the information as long as it's running through the banking system, how the number of credit facilities you have taken, and how you're servicing those facilities. We're also going outside of what is within the banking sector to look at SACCOs, look at microfinance, look at utility providers like water, electricity, to be able to collect all that information and put it into your profile. Now, what then happens is that if you are servicing your credit on time, then your scores will continue improving as this information comes into your profile. If you have a few challenges here in paying your water bill, paying your electricity bill, that could start pushing your scores down. So we have access to a lot of information that we now are able to use to assess customers' creditworthiness. And
I've asked you this question before, but just when you start going to utilities and you start looking at things like phone bills, water, electricity, or even other payments that are made, what happens now if an account that you had 7 years ago and you stopped using that account, but it's still in your name, but that information still passes through your hands? Doesn't that now put you at a disadvantage where now I have to come seeking you to kind of change your assessment of how I ended up on that blacklist?
It's not really a disadvantage. It's look at the example of where most of the banks that collapsed with a lot of customers' deposits, and there are borrowers with those banks. And the banks were then put under statutory management with the Deposit Protection Fund. Most people had actually forgotten about those loans. But when that information came to the reference bureau, you go to the bank and the bank tells you you have an item with a collapsed institution like rural urban, which collapsed a long time ago. The other example I have is Higher Education Loans Board. You finished the university 20, 30 years ago. You didn't pay your loan, and But the higher education loans board cannot just write off that item because it's an obligation that you have. So all that information then comes to the bureau. So it then just goes to remind you that there is an item that you benefited from which you have not addressed. And therefore, you are called upon now to address it so that we sort of like clean you up and now put you to start moving forward in a proper way.
What happens if I clear my debt? I'm able to, if I'm made aware of a debt that I had, able to clear it, do I still remain on that list for 5 years?
If you have cleared, yes, you remain on the list for 5 years. But the important thing that I need to mention is that being on the list for a debt that has been cleared does not necessarily mean that lenders will deny you credit.
Yeah.
It is just to remind them that at some point you had a default item, and therefore when they are making that assessment, they need to take that into account. On a credit scoring basis, that item will not find its way in the credit score.
Yeah.
What finds its way in the credit score is active information that pertains to the facilities that you are currently servicing.
You're collecting a lot of data from SACCOs, banks, MFIs, almost mobile loan applications. Just looking at that, has the level of repayment improved ever since the introduction of credit reference bureaus? Or could you say that there are still characteristics where loan defaulting is still high in this country?
In fact, a lot has happened. Actually, I recall that in 2010, when the credit bureaus were licensed in this market, the average non-performing loans for banks was about 12%.
Yeah.
Currently, it's now averaging about 7.7%, which means that difference, actually, the credit reference bureaus have had an impact in reducing the default rates in the market. The other thing we are seeing is that the number of people who are able to access credit has actually gone up, and specifically on unsecured credit. So that impact has been there. Now, the incidence of serial defaulters, people who would move from one institution to another, leaving a trail of bad debts, that now can no longer happen. Yeah. Because all that information has found itself into the bureau. So it's sort of like the system is now being cleaned up of what you call the bad guys, yeah. The serial defaulters. They cannot find room in the current credit environment. What we'll now be looking at is increasing access to credit, and just making sure that those who are accessing credit are able now to pay and improve their purchasing power.
Do you think it has had an impact on how banks relate to one another, where now they're able to know this person has a... Can banks use, what I'm maybe trying to ask is, can banks now use that list to more or less look at people who are good borrowers and actually poach them from other banks? Have you seen that kind of characteristic happening now?
What we have seen is that the average Kenyan, about 40% of borrowers have accounts in more than one institution, which means many people are getting multi-banked. And therefore, there's a bit of high mobility in seeking for loans across board, because that information is available. You know, the credit information on the bureau is actually an asset to a borrower. You can walk with it to a bank and say, this is my credit profile, I'm seeking for a facility, can you consider me? And that's part of the reason why we're now actively encouraging customers to look at their credit reports. Look at your credit report, see the rating that you have, and understand that rating, if it is a good rating, anything above 400 can access you to further credit from any institution. And with that empowered scenario, then you will see many customers moving around looking for banks that can give them better rates and better terms.
Is it now a case of where now at least a borrower who's above 400 is able now to dictate or even choose where he's able to get credit at the best interest?
I would say that any borrower above 400 has access to credit. Yeah. You will actually find someone to lend to you. If your scores begin to go above 700, you have the power to engage a borrower.
Dictate terms?
Not dictate terms, but negotiate.
Yeah.
Negotiate for better terms. Scores of 800, between 800 and 900, you're really in a good position to decline high interest rates, because then you are a really good borrower. And therefore, what we're seeing is that power is now shifting from the lender to the borrower. Yeah, where the borrower can actively engage the lender into a negotiation process.
Are you able to give us some stats? Who's on the, how many people do you have on 200, between 200 and 400, 400 to 700, and people who are above that? Is there, perhaps, do you have any kind of those numbers that could able to show us how effective credit reference bureaus have been?
What I know is that in the global database that we have about 6 million unique borrowers coming from the entire banking sector plus the microfinance sector, and about 1.2 million of those could be with scores below 400, which means they're in the default category. The rest of them would be in the scores above 400, which means they are in the good borrowing category. And therefore, you find that there's a higher proportion of people with good scores than people with bad scores.
So it's making people honest?
Sort of like, I would say, discipline. Take a case where somebody had taken an M-Shwari loan, just borrowed 500, and they decided not to pay. Now that information comes to the bureau, and one day you wake up and you say you want to go to a bank, and the bank checks and finds, oops, you have a default on M-Shwari of 500 shillings. Maybe you are looking for 500,000 shillings. So the bank then will have to remind you that if you defaulted on 500 shillings, how the hell would you pay a loan of 500,000? That shocks you. Perhaps you didn't take the M-Shwari loan of 500 seriously. And you see now that item will remain on your profile for 5 years. Every time you go for credit facility anywhere, people will see that you defaulted on M-Shwari of 500 shillings.
That now begs the question then, is there a cutoff of what a default can be, or is it any borrowing so long as you're unable to repay, be it 10 shillings to 10 million shillings, so long as you defaulted on repayment, you are automatically in the system as a defaulter?
The general trend has been that any credit facility that you accessed, whether from a bank or from a SACCO or from a microfinance,
regardless of the amount
that is due, but you have not addressed it, would find itself onto the profile. I have seen cases where you may have paid off an account, but there are some charges that you did not clear, and the bank thinks that those charges must be paid. If you don't go to clear those charges, that information will find itself into the bureau. It could be 100 shillings, or it could be 200 shillings. So the day you go for a facility, in your mind, you would be thinking that I'm done. But the bank still has something that they need you to pay. Now, if that information then goes to the bureau, on your part, you think you're clean. On the bank's part, they think there's something. If you go to another bank and the other bank accesses your profile, then they will think that you're a defaulter of 200 shillings. And the more reason we're saying that it is important for you to check your credit profile, just to see what items have been listed there, that are you okay in terms of what you understand your credit standing to be.
And just given the say that, you look at markets like the US, where people actually know their credit scores and are able to move from bank to bank and say I have a good credit rating from time to time. In Kenya, have you seen the level of individuals actually coming to either you or other players in the credit reference bureau business actually coming to get their own reports? How has that uptake of credit reports been?
Here in Kenya, I think that the scenario is changing. If we look at when the bureaus were introduced, nobody knew what bureaus were. The first information you got that a bureau is a blacklist. And if you find your name on the bureau, then you are condemned. That has changed. And what the message that is going out is that first, the law, the credit reference law, allows you to access a free credit report every year. Free credit report every year. That information is not in the public domain. But again, the other thing is that it is advisable that every time you want to access credit or apply for a loan, it is always advised that check your credit report first, so that you don't go to the bank and then you get surprised by things you did not know. But because many people have been denied loan, when you go to the bank and your bank denies you credits and they tell you, go and check your credit profile at the bureau.
Yep.
And then they'll give you the bureau's address. That has started pushing traffic to the bureaus. And that's why we at Metropol decided that instead of waiting for people to come from the banks when they're denied credit to come and check their reports, we developed a system, a mobile-based phone system, where you can now check your credit score from wherever you are. If you dial *433#, that accesses you to your credit profile. What we're saying is that we will give you your free credit report every year as long as you are registered on *433#. But when we introduced this system about 2 months ago, we've seen the number of people interested in checking their credit reports increasing, and people are discovering things that they did not know about their own.
Still have a poster bill to pay or KPLC bill to pay.
True.
All right, thank you very much. That has been Sam Omukoko, General Group Managing Director for Metropol Credit Reference Bureau, just telling us the importance of credit rating. So if I was you and you wanted to go to the bank to borrow, obviously checking your credit score is going to be crucial for you to be able to actually negotiate with your bank on the kind of terms that they give you on your credit. We take a short commercial break, but don't go too far. Sophia Wanuna and Michael Gitonga will be back with more.